Hey, this is Elliot Wave Sage. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So we had a chance to see how the market closed after the election. So it was a Republican sweep, and we have a lot of euphoria because of the results. You know, a lot of people were obviously very happy and pleased, and so they expresses their enthusiasm by pulling out their iPhones and Androids and buying market buying stocks across the board. And that's a sign of euphoria. But where we are in the cycle, it's actually perfect for how a blow off ends, how this cycle could end. You know, can't get any better than this type approach. So let's look at the count. So looking at this count, the way I look at this is end in diagonal now. Given all the bearish divergences, I have to label it this way. I have to label it this way with a three wave and a three wave, and then we should get maybe another pullback and one more high. I'm thinking, looking at the nature of these pullbacks. So one more and out. So we're really close. So the market's still very close to a major top, a generational top. If that, the target I've always had all year was 609. Could we hit it? It's possible. We'll have to wait and see if that final target. My last update, I showed the three-wave move. This was the great trade, and then this was kind of the indecision area where it was sidelines. This is see what the market wanted to do. But now it's clear you have your five up on a five, and like I said, you have bearish divergence across the board. Let's look at the other time frames. The daily time frame, the same thing. Bearish, bearish, bearish. The weekly, bearish, 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 bearish. So again, this is a sign of a top, not the sign of a new bull market unless we could start pushing higher. But I believe a lot of the energy was released yesterday. You'd have to get another day or two of what we saw yesterday to change the stochastics here. The monthly, same thing. Bearish, bearish, bearish. This is coming. Okay. This part of the cycle is coming. Don't be naive. Don't be delusional to think it's just going to do that. Right? This part of the cycle's coming. We saw it here. We saw it here. We see it here. We see it here. We see it here. This is coming, and when it comes, even if it's not here, if it's a little later or even a little later, that will create the long-term investment opportunity you want, because this market won't just do this and then do that. It's not going to do that. It won't do that. Okay, so that's where we are. So the market's got at some point a reversal. So we'll see it on the lower time frames first, and the 4 hours very extended here. The 45 way overbought. Again, still below this peak. This peak was pretty overbought and then eventually gave way. So it will take time to slow down. Now we have a big news event with the Fed meeting. The Fed can easily rain on the parade of the bulls here very easily. It's a very easily. So keep that in mind. But I'll say no trade on the SPY sidelines. The Dow Jones, same count, switch into ended diagonal. In a lot of Elliott wave, guys had this kind of like, so I think that's what it is, ended diagonal. So 5, I think, is missing a pullback and out. So I think you have to expect something like this, like this, like that. That's what I'm thinking. That's what I'm thinking. So perhaps the first dip, if you're a trader, you could buy long to try to play that. Because I bet this will be pretty nasty upside here. That's what I'm thinking. Now, that's if this is the count. Now, this may not be the count because we could still have a flat where we actually topped. 5 was still here. And we have this A, B, C, which essentially goes straight down. No, like in a massive flat. Very unusual pattern, but it could happen. So that is a possibility. So if you're going to try to play that pullback, you got to understand you could be buying that flat. So I won't want to trade this really until I get really good clarity of where we're going. So I just keep that in mind that this could still be not the right count. But the point is I believe a top-in pattern that's here. So daily, bearish divergence across the board. Weekly, the same thing. Monthly, the same thing. The 4-hour, it looks like, if we took it out, so if we took it out, what that represents to me is that we'll extend in 5 higher in the Dow, and then this isn't ready to reverse yet. That's what this tells me. Looking at this, so looking at this count here, this could be even impulsive, and we'll have to wait and see. So this may not be an ended diagonal, but the other count that supports this is a flat. So if it's the flat, since we do have the divergence erased, then you would put the 5 here. This finished up like we originally had, and you have this A, B, C, some pattern like that developing. So if that's the pattern, we'd want to see it reverse right around where it is now in this area. I'll just leave that there. So right there. So we'll go back for now, label this as a flat top here, and then we'll see if this pulls back. But if it doesn't do that, then it's impulsive. You have a 1 2 1 2 1 2 3 4, and then we have to label it, and this actually will go pretty much higher in the Dow. So that's a very interesting development looking at the divergence erase. But I think looking at the other indices, I don't see it as bullish. This is a very tricky way to this is not very easy to label. There's a lot of possibilities. So, but looking at the swing, you have 3, and now you're coming up. So maybe we will get that flat in the Dow. The triple Qs, again, I showed this alternative count. If we broke the high, looking for AB, again, ended diagonal up to 523.21, then drop again. If it's not, this could still be a flat if it erases divergence and drop, but that would be buyable. Right now we have divergence, and the 4-hour, this impulse right now is still showing bearish divergence between the 1 and the 5. If we erase that today, then we would look at a flat correction. Again, still put the 5 here, and then A, B, and then C. Use your imagination. So this could change. The IWM final target 244. Looks like that's where we're heading. We because it's an X, we want divergence erased on almost every time frame, and I think we'll get that. We want to take this peak out. Want to take that peak out. We want to take those peaks out, and if we can do that, that should mark the top in the Russell and this double correction. W, X, Y, and then we'll see it reverse is what the idea is. See it reverse. But it looks like it's got more upside, a lot of momentum. I am seeing internet traders literally betting their whole stack on the Russell, like max leverage. They're convinced it's a major bottom to go all in with all their chips. Very emotional trading right now. Very emotional trading in the Russell. All right. The big Bitcoin did pump higher. So Bitcoin, looking at the bigger picture, we made that fifth wave. We want it. We took that high out. Now you have 5 up. Bearish divergence. So this could be dual pullback, back down to 62,000 and out. But there's another count you need to be aware of on the higher time frame. So right now I have it at 1, 2, 3, 4, 5 with a pullback in a 1, 2, 1, 2 maybe. But some people would label this as a 1, 2, 3, 4, 5, and 5 is over, which means it would be a pullback back down to 44,000. And it's, to me, I don't favor that view, but I would be very cautious. Again, FOMOing in, because you could be FOMOing in on a fifth wave from this whole cycle, and if you are, you're going to have to ride it all the way down through this kind of mini bear market to come back out again later, if it's that count. And again, a lot of bearish divergence. This could easily be potentially a fifth wave and not a start of a new cycle. I think it is because they spent so much time here consolidating. I believe this is the count. 1, 2, 1, 2. But like I said, maybe it's not. Maybe it's just not labeled correctly. And some people, like I said, have it labeled 1, 2, 3, 4, 5, and then it's down. All right, just showing options. And then oil still struggling, and I still want to see it give up the ghost here. And if you look, it looks like we made 3 up here. But looking at the way this looks, I wouldn't be surprised if it makes a bigger push higher in B. But at some point this B ends and we go into C. Gold obviously peaked. Warning sign. Is gold anticipating future rate increases that are to come, that the market is oblivious to? I think so. It's a people are getting out while the getting's good. Silver looks like that was a major peak, and now is starting its first leg lower in its first wave A. That can go as low. We don't know. It could go pretty low. We just don't know how low it can go. The first leg, but the first leg will end, bounce, and should fail. But we'll wait and see how it develops. But this again a warning sign that there's a lot of euphoria in the market, and these should have been stronger if it was really risk on yesterday. It wasn't really risk on. It was just certain sectors had mega pumps, and it supported the whole market. But certain sectors didn't. A lot were in the red. Not a lot, but there were sectors in the red even. So just something to keep in mind. The VIX, of course, got killed because the risk event, the perceived risk event is over. Only traders are going to find that the real risk event has yet to surface, that they really need to be aware about. So we're obviously still in some kind of connector wave here, and a bigger connector wave. So again, you have this 3-wave move for W, 3 waves again, and now 5 waves down. So this is like a big flat correction that we're in right now in the connector, which is very difficult to trade unless you're scalping it in and out of your trades. So that's what we're looking at. But I still, again, that means we still haven't had Y. We'll have a different target now. and now it goes lower. Uh, Probably to come back to retest this area here, in this area, as this thing unraveled on traders. As you can see, 1, 2, 3, 4. So the VIX is already has its 3 of 3. So VIX should start a bottom in process here, and then I'll be looking to go long again on volatility, even though that trade didn't work out. Through money management and risk management, it's not a big deal. But a lot of people bet too much on volatility and bet too much risk. Didn't have the right stop loss. Didn't manage it while you had wins in here. Didn't take profit, and because of that, they had a very bad day yesterday. And it's sad, but that's why it's so important to take a little profit as you have it, reload, manage your risk, stop out, don't put more money in and chase it, balance your what you invest, right, between trades. Don't just ever put a lot in one trade. And a lot of people are doing that with the Russell right now on the long side. Just so you know, they're making that mistake right now. But that mistake will come out soon enough. The interest rate market keeps going higher, and it's again, dumbfounding traders. Looks like we're starting to get into this fifth wave here, a fifth wave of some kind. I'll probably put that 3 here and a 4 here. Clearly the trend is higher. This is the ticking time bomb that will eventually, I think, come back to haunt the market, just like it was back here. This is the ticking time bomb rate, interest rates. The 10-year, again, we could easily erase divergence, and this could become a 1, 2, 1, 2, 1, 2, and boom, which it wouldn't surprise me if that happens. We actually called the bottom exactly on my channel of the turn on rates. No one did. No trader, no one you follow on TV did it. No one with 1 million followers did it. Nobody but me, I think, called this turn. No one called that turn out there on rates. Warned you to get out of TLT. All right. Let's look at some other things that could drive the market, like the Japanese yen. The Japanese yen is still weakening and extending higher. Looks very impulsive now with divergence. So obviously it's a different count than we have here. So we'll have to let's take a deeper look. Could be a 1, 2, 3, 4, 5 with an A, B, C correction. And I believe that's how I would label it now. Something like that. Or a 3-wave. Actually, I would do it as a 3-wave down. So like a W, an X, and a Y. And then this is an ABC. And then this C should be over soon at any moment, which is kind of syncs up with the market peak as Japanese yen strength comes back with a vengeance, just like we saw here. When we finally get this reversal, that'll be the warning sign the market has peaked like it was in July. This is the warning sign when this finally turns. So keep an eye on that. Dollar index, again, here we are. We called the low, and we're extending higher. The low is in. And again, this is kind of a warning sign that maybe the dollar is turning before the market realizes what's going on, as smart money is leaving, and we taking profits, and eventually the rest of the market will follow suit. All right, so that's the market update, guys. So I think the market, if I'm looking at this, is in a fifth wave across the board. I believe that if it's an ending diagonal, we'll get a pullback, a retrace, maybe even a gap fill, and then actually another high swing up. But if the count is a flat, where I showed you where we actually peaked here, and this is an A, B, then this could crash at any moment, and it will be a spectacular reversal crash type situation, which to me would take a news event of epic proportions to do that. And that's why the only news events I could like contemplate would be like maybe a Federal Reserve raises rates, which I don't think they would do, but hey, that would do it. Or China took Taiwan over the weekends, or maybe something goes wrong with the Trump election. Maybe they still will want to press charges and arrest him and put him in jail before the Electoral College votes in December. And they say, hey, since they haven't voted, he's not really the president, so we can jail him still early. Or maybe, God forbid, something happens to him and he can't run, and then the party officials get to appoint who they want for president because the Electoral College hasn't selected him officially yet. If that were to happen by before December, that's what would happen. It would not be J.D. Vance until the Electoral College votes in the early December. Then it's succession. So there have to be some major situation like that I could contemplate that would create that type of generational peak. Something will either have to go wrong with the election that no one sees coming, or it's like one of those other black swans. China, wake up, China's in Taiwan, giving everyone the middle finger, like, we got you, we got it, what are you going to do? Or it's going to be the Federal Reserve has the last laugh, and they flex, and they're going to start to flex and tell Trump, yeah, you're not getting what you want. We are gonna we're gonna make your life difficult, which would be stupid because I think Trump will suicide. Like, they would suicide themselves as an institution if they start playing that game. But I think we'll have to wait and see how this develops here. And then of course the small possibility is it's just the moon boy divergence is erased. We have to wait and see how tech and SPY do to see if that happens. The first sign the first clue could be tech erasing the divergence here. But really, like I said, even if you took this peak out, it could still be a flat. It could be a bigger flat. The real divergence you really need to take out to extend the market would be this on this third wave here across the market. If that happens, then the market is there is no crash for years to come, because this would become a 1-2 as well. So this would be a 1-2, 1-2, 1-2, and we would probably go to SPY 1000. So yeah, that's the thing, but it's got a long way to go to get back here. So we'll have to wait and see if it could do that or not. But the odds are that it won't happen given all the divergences I've pointed out. And I think we have max euphoria. Like, how good, I mean, you have fundamental investor euphoria on TV. They're gushing over themselves. Now technical traders, seem excited about the Russell breaking out. So you got all this euphoria, and then you have, the Trump, wing buying, just they're so happy they got to buy something to express their happiness. So I think that's what's going on. It's euphoria. Typically, that's what you see at a market peak, euphoria. Like it can't get any better than this, and then something goes horribly wrong, right? Horribly wrong. Maybe there's maybe there's something going on with the AI bubble with SMCI and Nvidia's wrapped up in it. Maybe there's a big accounting blow up and they're not worth what they think they are worth. That could do it too. So there's a lot of ways to prick this bubble, but if these charts are right and this analysis is right, something in the next week, week or two, something very, very bad is going to happen. And I don't know what it is, but whatever it is, it's going to be, it'll probably be on the equivalent of like a 9/11 type situation, like because if you're calling a generational top that takes you into a bear market that brings you down all the way back below the COVID lows of 2020, more than likely it's got to be something very, very, very serious, and like monumental shift. All right, guys, that's what I've got. Good luck, and well, hopefully I could get a live stream in at some point, and I'll try to do one as soon as I can. Thanks.